And good afternoon. Welcome back to Progress is Everything. Straighten this out a little bit. Seems my glasses are a little bit. Oh man, what's going on here? I'll have to fix that at some point. Anyway, talking about investing in startups today and the difference between that's going to really annoy me actually. I actually went to get these fixed and they've obviously messed up a little bit, so just take them off. So in today's video, we're talking about investment analysis, when to invest in a startup the first time versus a follow-up round. Firstly, let's describe and analyze what I mean by that. Initially, you have the option to invest in a startup, right? It's the first time you've heard about it, and you have an initial decision to make. Then, after some period of time, maybe 6 months, 12 months, 18 months, 2 years, whatever, the startup comes back to the market and asks for more money. Sometimes they do this directly in a raise format. Sometimes there's some interim steps with VCs and whatever. And on some occasions, you might have caught it quite late and they may raise on the public stock markets via an IPO or initial public offering. In today's video, we're actually going to be talking about the early stages, so early stage startups, and when you need to make a decision based on investing in an early stage startup and the next step. So I'm going to share my screen now to go through it. I am live streaming, so forgive me if there's any kind of hiccups. There may well be. So in a previous video, we looked at investing in a startup, which is the first thing. This is the first time these guys have raised. I'm going to put on the wonky glasses now so I can see. This is the first time Train Effective have raised. They're a kind of sports tech business in football, using like celebrities to help average people learn how to play up to a high level. That's investing in like a new company. And I've got a whole video about that I'm going to be bringing out at some point soon. Where I do a pitch analysis and thinking about investing in the start for the first time, analyzing what the people are saying. But let's look at the other options. So in this regard, there's 3 companies here, and I have actually invested in 2 of the 3. Regimat 3D, which is a Spanish startup, and Art Finder, which is a UK startup. So I'll mention a little bit about them, and then we'll talk about one thing, like the decision one can make. Okay, so Art Finder is like a tech platform to buy art, and there are competitors for them. And I invested them, I believe, in 2020. I didn't think they were going to be that big, but what's happened is they've kind of done very, very well. They've got now a lot of artists on their platform, and they're growing. And if we just quickly click on them, they're valued at 17.5 million. I think it's up from maybe 10 million, I think, was the first round. So what's interesting is they're going for almost the same amount of money as that football star, which is raising for the first time. And they've raised a similar amount, 210, right? So these guys are coming back for the second time. Yeah. They got 3.5 million in revenues. They're not profitable yet, but they may be in the future, right? So if we compare that quickly to Train Effective, it's really similar, actually. It's really interesting. Look, they've raised 218, which is quite similar. They're going for 300, not 350. This is the first time they raise, and they're raising at 15 million. Right? And let's now compare it to Regimat 3D. Regimat 3D operate in a very interesting space. They basically create 3D printed medical devices, medical technology, basically, to help with things like printing cartilage or muscles or things to do with the spine. It's fascinating. It's like proper ethical, helping people's health. 3D bioprinters. It's fascinating. They're Spanish, so it's not always that easy to understand exactly what they're saying, I'll be honest. But anyway, they're about 18 million euros, which is probably 15 million. So it's a similar valuation to all 3 of the businesses. They're trying to raise 500,000. Again, they got 25 days, which is left of the campaign, which is very similar to to train effective, and they've raised 254,000 euros, which again is a very similar amount to the others. They've got 890,000 euros in revenue, and they're actually positive. They've reached 11,000 in earnings before interest, tax, depreciation, and amortization, which is basically profit, net profit. Another way of saying net profit, basically, more or less. And they're growing this at about 36% a year. So this is the only one that's profitable. So let's go back and let's take a high view analysis quickly. They're raising the same amount, roughly. Okay, 500, 300, 350, but it's a similar amount. You know, Art Finders 17 mil, Train Effective is at 15 mil, although yeah, they're not profitable either. These two aren't profitable. What was this? 18 million euros, and they are profitable. And what you need to, what one can do to analyze this is you should go in and try and analyze the pitch, which I've done for Train Effective, which will be coming out in videos. So if you want to deep dive into how I do that, I would do that. And you've got, I think there's a couple of ways to think about it. You can think about it in terms of, actually what we'll do this live. I'll actually do this live. One moment, folks. Okie dokie. So we'll start a new spreadsheet. And I'll show you the kind of things that I would be looking at. And bear with me for a moment. Computer's just loading. Okay, so new investment. That is the one. So I think that's how you say it. Train Effective Art Finder. So I've invested in these two already, and I haven't invested in this yet. Right. So you might want to think about the different facts that you know. Industry, 3D printing, biomedical, Train Effective, sport tech, art tech, software as a service, the expected revenue, 3 years. This is something you can fill out. I think they were saying 13 million from what I remember. We can jump into Art Finder now. You sometimes need to ask to get permission to like review these. But anyway, let's have a quick look. That's the art market. I think they've got I don't know if they've actually got forecasted. Here we go. So they're saying by 2024, which is a 2.5 year forecast, they're saying they're going to have earnings of 32 and 2.3 profit. That's exactly what I want. Oh, that's not. That's the other spreadsheet. So what do they say? 32. And here we can put a little asterisk. And we can say something like 24. And then the profit, 2.3. That's the little orange there, EBITDA. 2.3 million. What about the profit? They haven't said actually the profit for smart tech. I'm going to say 20%, which would be 2.6 million. I mean, that's actually a bit generous actually for a startup. So maybe we'll just go with 10%. Now, Regiment. This is Artfinder. Let's go back. Yeah, I'm doing this on Crowdcube, but you can do this on any platform, to be honest. I hope I've requested. Yes, see, that's in Spanish. This should be in English. Oh, look at that, 67K. EBITDA has increased to 68K actually from 11. So we need to remember that. It's always good to look at latest updates and discussions. So we should be working from 67K, 68K basically. Let's scroll down and see what they project. This is the bioprinting market. Towards the end, there's normally stuff on their projections. Revenue, it's gone from 27K up to nearly 900 from 2020. I'm not going to go for a deep dive, to be honest. I'm just going to look at the projections, commercial plan, blah, blah, blah. This is just revenue up to, well, 6 million in 2024 and 35. It doesn't say, does it say profit? It doesn't. Sometimes they do this where they're not actually giving profits, but they're saying 35 mil. I'm doing this very quickly, by the way. You know, if you want to do deep dive, this is the deep dive I did for, we'll look at that in a moment, deep dive for Train Effective. We're not doing a deep dive at the moment, so was it 30, was it 32? 35.4. 35.4. That's a 5-year actually. So we'll do 3-year. We'll do 3-year. Why not? So we'll do it 2024, which is 5.8. I think that might have been 5-year. Like when you're doing this yourself, you should do it with more care, obviously. I'm doing this really quickly. I'm recording it in a live stream. So, you know, it's kind of not as precise as you might want to do it if you're doing it for yourself. I kind of do this in my head anyway. I don't always do it in a spreadsheet. And of course, you don't need to always do it in a spreadsheet, but it's not a bad practice to do this. And it's one way to do it. I'm not suggesting you do it this way. It's just one way to do it. This is the way I do it. I don't like all of the things here, so I don't know. I like to make it a little bit more interesting to look at. Artfinder is kind of a red logo. So is Train Effective actually. So actually, Artfinder might be a little bit darker. Train Effective, I think, is red. Regiment. Don't know what colors they use. Kind of a bluish color, so I'll make that blue. Fine. Now we're going to. You can do other things, like there's qualitative things you might want to look at. So management platform. Audience size. There's lots of things you want to be thinking about. Target addressable market, service addressable market, expansion plans, competition. I'm not going to look at these today because they're a little bit harder. I'm just going to do basic forecast. So we're going to do 10x, 10x. Yeah, we'll just do 10x and 20x. This is like a 3-year. Like I probably would want to actually map it out for maybe a bit longer than 3 years. That didn't work because there's a pound in there. It didn't work because there's a K in there. So that's in millions. Seconds. There we we go. That's millions. So unfortunately, across. There we go. Put this in properly. Whoopsies. And again. And then to get 20x earnings, this is like a valuation thing, how much it could be worth. Growth companies are actually sometimes at 30x. You know, at times Tesla was at 100x, by the way. So it's not that bullish to do 30x. Of course, this is just off that 1 year. If they keep growing, then it could be worth a lot more. So what I'll make to this, I mean, this is a very, very, very rudimentary way of doing things. And it might not be the way you want to do it, but it's one way to think about it. And what, like, you could have like a qualitative assessment out of 10. Qualitative assessment. Oh, that's hard to spell. We'll just go with qualitative assessment, like out of 10, like out of 10. I really like biomeds. I think it's really interesting. The problem that I struggle with is I don't know how big it could be. I find it hard to analyze. It's the only one that's actually profitable now. They made 70K, something like that. The others are not making a profit, but I kind of understand the art market. In fact, I could probably show you one of the artists. I've got a painting here, actually. One of the artists, I bought this original from an artist, I don't know, 5 years ago or something like that. And she's on Art Finder. One moment. Oh dearie. Okay. Put that up later. But she's using Art Finder, the platform. And, you know, you can find her on there. And people are buying her art on Art Finder. And I've just got a feeling that the competition is pretty weak. I think the audience size is pretty large. The management's very, very good. So the target addressable market, you know, that's like the whole, you know, the market potential. And I think it's massive. I think I'd expect there'd be more people that like art than people that want to be professional footballers in a very serious way. I think when we talked about in that video, for the kind of 3-year target market for Train Effective is large, but whether they're going to get it or not, I don't know. Service addressable market is what they're going to get. And, you know, I think Art Finder is going to be much larger than Train Effective. Regimet 3D is a kind of B2B model. So I guess they're selling to hospitals and people like that. So I'd need to, like, this is a question mark for me, even though it's profitable. It's one I know less about. And that's kind of the industry thing. Like, if you understand the industry, I don't understand this quite as much, to be honest, because I'm not in medicine. I know marketing, right? And these two are consumer businesses, and, you know, they are quite easy for me to understand. Now, for you, you might work you might be a doctor, or you might work in the medical industry. So it's good to pick startups where you kind of understand them. And that can give you, what can give me certainly, a lot more confidence when I understand things. It builds conviction. And, you know, that I'm sure that'll be the same with you guys as well. I just want to make this a little bit nicer to look at. It's going to go a bit funny for a moment. 1 second. Just because I like to look at these things in a different way. There we go. I don't like to look at black screens the whole time. I think we said this was blue. So this was bright red. So this was dark red. Okay. So yeah, I think it's important to pick ones where you kind of know the industry well. And let's look at this valuation. I mean, this is conservative, right? In the startup world, they could easily raise a lot more money. So if we go back to all three startups, then they're all raising between kind of 300 and 500,000. If in a year's time or 2 years' time they raise $1 million or 2 million, then their revenues and profits could grow substantially. So that's something to kind of try and bake in as well. Like, this is conservative, right? But then, imagine if they 2x or whatever, if they 2x like that, it's kind of hard to do, to be honest. But I'm not going to do it here. I think it's kind of redundant doing it here, in all honesty. But like Artfinder, if it's worth like what, 17, 18 now, 17 and a half, and just by a basic valuation at the moment, like it could be worth between 20 and 50 in the next 2 years. If they were to do another raise of $1 million in like a year or two, it might even help them to grow even faster than that. So they might even get to 100 million, which would be 5.5x. So that's kind of interesting. Train Effective, we've looked at it in another video. I did a quick analysis of their model based on like sports camps, which, one second, I'll make it a bit nicer. Like, if they can grow their camps, that's supposed to say bullish, not bullier. I did some forecasts here. I mean, this is something you might want to do if you've got some startups, is to go down to the product level and then see, which is a potentially profitable product, and then do some forecasts, some basic forecasts. It's not that difficult to do this. And then you want to go back to your overall analysis and say, kind of, how realistic is this? And I think this is fairly realistic. They haven't given product figures actually, so we're guessing on that. But I do think that's quite realistic for Train Effective. I honestly think if we go back to all three, this is going to be boom or bust with Train Effective. They're either going to do really, really well and be worth 100 million, 200 million, 300 million in 5 years, or they're just going to grow really slowly and it's just not going to really work. They're not going to build that profit in. It's just going to be a bit of a who knows. Regimat, I think, as I said, my industry knowledge isn't that good. They're already profitable. Let's just click on them a little bit and just dive into it a little bit. Okay, so they're saying the market's worth 1.6. Working with a massive pharma company, 3.8. The CEO is the first person to have a PhD in 3D bioprinting, so obviously they're using experts. We can have a quick look at their deck again. Wait a minute, it's here. Right, so they're printing different things. It's very, very hard to invest in something you don't understand. I would probably need to do a real deep dive on this because I don't understand the market that well. I kind of get it in theory. You print something that's rare, something that works well, something the doctors need and want, and they're going to pay for it. Okay, they've got a lot of leads. They're getting a lot of leads on LinkedIn, which is good. Blah, 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 blah. The budget is like 50 to 500K per year for, I guess, their leads. So it's like this. It's a B2B market, particularly in this space, this medical technology space. They're saying they're going to IPO. That's interesting. It's kind of soon. It's only like next year, so that's kind of interesting. But anyway, I'm going to zoom out of this because I don't know that much about it. They're going to use up to 1.5 million for marketing, product dev, new protocols to create new tissues. I guess that's product dev as well. Some growth online. I guess that's marketing as well. Opening centers abroad. So maybe they've got some like training centers or production facilities. Yeah, it's much you need if you don't know about like an industry, then you can always ask somebody that you do know. The risk obviously is that you don't, it's secondhand information. So based on this, like if I had £1,000, what would I do? I know more about these two, Art Finder and Train Effective. Like I have the biggest conviction with Art Finder actually. So I'd probably put because I think it's the most likely to go up to 100 million, which is 5x. I put like the most amount of money there. So let's just do a quick thing. Okay. I'm just using, I'm just using 1,000 as a, as a guide. Sees. Right. So yeah, I have the most conviction with Art Finder. I'd say it's like 2x Regimat, even though maybe even 3x. So I just don't understand it. But I know they're trying to IPO. So like I'm gonna put a placeholder in here because of like 100. And it might go up from there. Oh, was it not showing? That's really weird. Black. There we go. Yeah, I have quite high conviction about Art Finder. So I'll probably put in something like 600. By the way, it's going all. Hello. Screw. And the remainder in here. Yeah, because I think like that could 5x to 3 grand, and obviously that if I lose there, it doesn't really matter because I lose 400, but I gain 3,000, which would be 2,600, which would be a 2.6x gain of that. Is this possible? Is it doable? Yes, it is. Art Finder has already gone up significantly, as well as some of my other startups that I've invested in. So when you invest in something you understand, you have a better chance of getting higher conviction, which gives you more confidence to invest more money. It doesn't necessarily increase the chance of you getting a good return or not. That's based on the business and how well the business is going to do. But that's kind of how I would do it when comparing like a new investment versus following up. Remember, I've already invested in Art Finder and Regimat, and I put kind of a tester amount in. I can't remember what it was, somewhere probably between 100 and 500 originally. The reason why I'm not putting in more into Art Finder is because I found even more exciting businesses, which I think I've done a similar analysis, and I think have even much, much bigger potential. So this is what I do with a kind of 1,000, but you can put in your own amount here, of course. And if you want to do it in a kind of more strategic way of analysis, you could do it on percentage terms. So you could say like equals that, times by 10%, equals that times by 30%. Whoa, can you just put the dot in? Equals that times 60%. And then if you change this number, like it's going to update it. Let's say you got 5 grand to invest, or let's say you just got £300, or maybe you've only got £50. It still shows you based on the percentages. So if you figure out the percentages first, then you can always change your amounts. Say you've got loads, 150k to invest, then it will show you what you can do. Or let's say you've only got £100 and it goes back, right? That's a little hack. All right, guys, I hope you found that interesting. I'll stop sharing my screen now. Whoa, it gets a bit funny. That's funny. You can see the painting in the background. It looks a little bit blurred. I don't know if I can unblur that. I'm not sure. You'll see how messy. I've just moved house. But yeah, that's the painting I bought. I love the artist, and I bought it on. I actually bought it pre-Art Founder, but she's now on Art Finder. Her name's Lena. Can't remember her second name. Anyway, I hope you've enjoyed this video. I love investing, and I think it's the right thing to do now, especially at this time of filming. There's really high inflation. It's about 7%. But investing is something good that you can do kind of throughout your life. And I think this isn't a recommendation to anybody else, but I think it's a good thing to do because it helps you learn about the world and helps your capital grow, helps your own thinking grow, and your own kind of personal growth as well. So I really, I think it's fascinating investing, and startups is even better than investing in listed companies, like Meta or Google, because they're doing so much and they're so well followed. They're not always on the cutting edge. Apologies about my glasses. I tried to get them fixed yesterday and they've messed it up even more. Anyway, I hope you've enjoyed this video. Remember that knowledge is power, especially the right kind of knowledge, and progress is everything. If you're interested in anything around this topic or investing in art, shares, or startups, then feel free to like this video, check out the other playlists and subscribe, and I'll see you guys in the next video. Take care.